What I wanted to mention is a little bit about the company first. It's founder-led, so Michael Intrater is the CEO. The revenue growth is something I always look at, 420%. It's a cloud compute infrastructure purposed for AI. So they also use the NVIDIA GPUs and they run data centers, right, for very large customers. They have some concentration in their customers, but some examples are Microsoft and OpenAI. They used to have last year, I think it was like 13 data centers. They're up to 33 and they have 10 more planned this year. So the growth is very, very fast. It's interesting from that perspective. These kinds of numbers on a very liquid name are unusual. And it came to my attention. I am always monitoring the new IPOs, but I'm also looking for liquidity where larger institutions can get in. From like a contrarian perspective, it's kind of interesting because this was a very hated name. That's very similar to Google when it first IPO'd, and even Facebook right before it came out of its institutional due diligence phase. So that's a little bit of a contrarian. Mid-May, if someone wasn't in the name yet, one of the William O'Neill's quotes that came to my mind when I was looking at the action in CoreWeave is, "This is not Aunt Susie buying," right? I just love that quote from Bill. The volume coming in to this name was quite extraordinary. So it's something that institutions could get a piece of. And the other thing that caught my attention, NVIDIA is an investor in the company as well. So just a little bit about that. It was around mid-May where I also noticed that it reminded me of eBay. Now, I've been using a 1998 precedent, so I've been studying a lot of the 1998 leaders, how they came out. And one of the things that CoreWeave reminded me of is this deep base during a bear market. So they don't look identical. These are daily charts. This is when I first kind of noticed that it reminded me of eBay. So I've marked the follow-through days on both of these. So this is eBay's IPO base from 1998. And you can see that it kind of started that U-turn or hook-like pattern coming right as the market followed through. Now, sometimes when we see like a very deep correction, like 50%, that might, make you want to steer away from the name. But I always like to look at that in the context of the market. And so in 1998, that was a bear market, and that was the correction in eBay. And then, of course, in CoreWeave, we had our bear market recently. And you can see that it tried to form a little bit of a U and bottom out as early as maybe like April 7th, but then continued to roll over. So it didn't really turn until the actual follow-through day. So, as I was running power screens, this one was powerful on April 7th, but then had to roll over a little bit more before it started its move. So very, very interesting, the precedent here. I actually pulled something out of my archives for you all today. You might not be able to read everything, but these were actually my notes back, I think, from 1998. So a real dinosaur here, but this is awesome because you can see this is right from the Daily Graphs book, and this is what eBay looked like when it was breaking out. eBay, of course, staged this huge super gap out. I think it was up like, I don't know, over 40%. But you can see some of the numbers here. I made some notes that, there weren't any institutions showing up yet, but the big volume made me think that institutions could come in. I'm always looking for precedents. So even at the time, I was thinking, wow, this power was as powerful as Cisco. So I made some notes, but I shared this with you in case you want to take a close look at this, exactly what it looked like. You could see that the earnings had not come in yet. but revenue growth was strong. The reason I'm sharing this is rare rocket ship patterns, right? We highlight this in our book, The Lifecycle Trade, and eBay was the iconic example of that. And you can see once the rocket ship gets going, it can have quite an amazing move in a very short period of time. But these names can be very, very volatile as well. When they move up that fast, they can move, their ATR is usually pretty wide, and they can have some very quick and sharp sell-offs as well. The reason I actually went back to the book to look at which rules work best for rocket ship patterns. What we found is that the Everest, which is kind of like a parabolic signal for selling, is usually pretty early in a rocket ship pattern. So eBay actually generated that parabolic move and then even continued to go higher. The Everest signal was pretty early for eBay. So the genesis actually of the ascender rule that we go over in our book is the eBay move, the rocket ship. And that's a rule that works pretty well and worked well on eBay back in 1998. Now, I am holding a core position in CoreWeave, but I have traded around that core and I have mapped out my trades here. And one of the things I want to mention is it's really great to do a post analysis of trades because even though these trades were pretty recent, I had forgotten a few things, and it really helps to take a close look at all of the trades. So I'm going to make a more concerted effort to do that, but it helped me as I was planning for the IBD Live recently. But I wanted to share with you, you know, no trade is perfect, right? And I really want to stress that when trading IPOs, I get stopped out multiple times, usually trying to get positioned. And CoreWeave was no exception to that rule. So I can show you right where I thought it was going into a hook like U pattern. April 7th, it was very strong. And April 7th was the bottom day in the market. So I tried a position and I got stopped out, test position. So there were a couple stop outs in that early April timeframe where CoreWeave was not ready to get going.
Mm-hmm.
Then another mistake. So April 22nd was a what I thought was like a hook-like pattern. It was turning. It was on the follow-through day. It was showing strength. It was still early, and I bought there. Now that position I sold way too early. Days later, in a profit, but
Mm-hmm.
what I think is happening here is you're moving from a bear market to a bull market, and it's easy to want to lock in profits. Is this follow through going to work? I'm guessing that's my psychology. They're way too early on the sell. So then on what's that, May 12th, I took a
Mm-hmm.
position because it had formed what I thought was an IPO base, a pretty classic IPO base, and was coming out of that, starting to come out. I usually discount like the first day or two of the trading when I'm trying to find a pivot point on an
Okay.
IPO base.
Yeah. So a little bit lower than that,
Yeah.
fourth day.
Yeah, so it's a little
Mm-hmm.
bit of like a handle, like a little wedgie there, but tight, and then it comes out of that. So I was positioned there. I'm still holding a part of that core. Now, again, the Everest sell signal is early if this is a rocket ship, and the Everest sell signal did go off. So I did take some of the position off there.
And
And
just
then,
for those who are not sorry to interject,
sure.
familiar with that sell signal, clearly a big downside reversal off highs in volume. Anything else that qualifies it as an Everest sell signal?
It's a huge move. So the stock is really powering forward in a parabolic fashion. It's price move, there's gaps in there, things of that nature.
Mm-hmm.
And you look at all of those signals, and then it undercuts 2 days back. So
Yeah.
it actually intraday goes lower than 2 days back, and you can see that there it took out the last 2 days. So I
Mm-hmm.
did reduce the position.
Okay,
And
great.
then I realized, I think Mike mentioned, expectations breaker. I love to use that in trading. And here, my expectation was after that significant negative reversal that the stock would go down, and it didn't. It held that point and started to move out in what I thought could be, a high tight flag type of setup. On an IPO, I use daily charts a lot more to determine patterns as well as buy and sell points. So this looked flag-like to me. It was an expectations breaker. It was liquid enough. So at that point, I bought back the shares and then took another position in the name. Now that's very unusual for me. For an IPO, usually the position sizes are much smaller because they're not liquid enough and they're more volatile. In this
Mm-hmm.
name, I had the conviction, the precedent, I had a cushion, and so that allowed me to treat this name differently. And then I have reduced the position into this parabolic move. So this chart was prepared before yesterday's action, but I reduced those 2 days that I show you as well as yesterday. And now I'm down to a partial core. And what I'll do there is use the ascender rule and a combination of mental capital preservation on the core. But if it forms a flag on a weekly, I would be willing to possibly take a position again in the name. So it's one that I'm treating a little differently because of my precedent.
Great walkthrough and a lot of follow-up questions for you. So first, something that you just mentioned, what is the ascender rule that you are using?
Yeah, so the ascender rule has several parts, and it actually is a close below the 21 day, a close below the 50 day, and then you have a hold based on time. And I
Mhm.
think I have a little bit of a chart on there, Allie, maybe on the next slide. Do I? Okay. This
Oh,
is
okay,
the
perfect.
details of it.
Oh,
It was
both of the things that I asked you about. Yep, they're right
Yeah.
here.
Yeah. So that's the details of it. We go into more detail in our book. But at this point, I'm using the 21 day as well as mental capital preservation. So I wouldn't want to give back more than half of my profits on this, even on this core trade. And then I would use the 21 day as well. So that's kind of in the 100 or so range.
Great.
Good
Okay.
question.
And then the hook pattern. I remember you talking about that before with an IPO stock. So, like the cup with handle or double bottom, I feel like the hook also, gives you a visual to work off of. But anything else that you think traders should know about how to identify this hook pattern? Is it specific to IPO stocks, or what can you tell us about the hook?
Yeah, good question. I usually use it just for IPOs, and it's usually very early in the structure. So it typically forms, I've noticed, in a few weeks. So I'm looking for that turn around 2 or 3 weeks in. I'll tell you, it's tricky to identify, and it's easy to get stopped out and be
Mm,
wrong too early on the
mm,
turn.
mm.
So my stops are usually tight. I'm very careful when I'm using that strategy to get positioned. And it's usually a smaller position because I know the likelihood of getting stopped out is pretty high. I'm looking for some tight action there after a couple weeks, a reversal. Sometimes it coincides with the regain of the first trading day. And it literally looks like a fish hook on the pattern. It's typically several weeks long.
Great. And then in terms of the size, was your size at the hook entry smaller than that IPO base pivot, or can you give us any rough percentages that you were using for your size and what you consider your core? Lots of questions about that.
Yes, yes. So typically I will use for IPOs, I size it half my regular position size. And yes, at the hook pattern, that's always smaller. And then in this particular case, it's unusual for usually what we found with the IPO advance phase, it's good to boss, which is buy once and sit still because
Mm.
it's very easy to get stopped out if you raise your cost basis too high. So in this name, this is unusual in terms of how I treated it because of the eBay precedent. Normally, I would not be pyramiding and adding additional positions. Normally, I would just be holding the low cost basis and then looking to trim and then waiting for my sell rule to trigger. So this is more of an unusual situation, and the high liquidity let me do this. In most names, IPOs, they're just too illiquid. Even if they do trade 20 million or 100 million average dollars a day, they still trade very thin. So I never want to get trapped in a name. Typically, my starting position is half of a regular position, and at that hook pattern, that it might be even half of that. So all good questions.
And then what is your mental capital preservation level in percentage terms? What percent of your gain are you looking to retain?
Because the gain is so significant, I've made it 50%. I wouldn't want to give back more than half of even on the core position.
Okay,
We have
great.
found, however, that if you're holding for the long term and you really have high conviction and a high cushion level and a stomach for drawdowns, and you're in a big leader, sometimes the MCP has to be set as low as 35 to be able to retain it through these drawdowns. So that's really up to a trader and their psychology and what makes them be able to handle a trade well in terms of how much they want to retain on the profit level.
What type of stop are you using? Is it a percentage stop? Are you looking at an undercut of the lows, or how do you handle those sort of initial stops when you're trying to get positioned?
Yeah, great question. I usually use very tight stops,
Mm,
which the reason for that, and I'm trying for 3%, 3, 4,
mm,
5 max.
mm.
But the reason for that is I'm willing to go back in and try again. And if I wasn't willing to do that, I would have to give them more room. But I just feel like I'm wrong. If I'm down 3, 4, 5%, I'm wrong on my entry. Normally, on trades that work for me, they're immediately up, especially on these like hook patterns on the IPOs. I want to be like almost immediately up. Those work the best. So I'm willing to just cut it 3%, try it multiple times. I'm going smaller when I'm trying to get in on the hook pattern. So I'm willing to take that loss, quick loss, and then try my entry again.
Okay. And now looking at the current chart of CoreWeave, the
Yes.
next question that our audience wants to know, okay, so what if I missed it? What do I look for now to try to get in? So, in your study of IPO moves and with this pattern that it's currently showing, what could potentially be the next entry point for traders?
Yeah, great question. I would say what Mike mentioned. I would be looking at a weekly chart. I'd be studying high tide flag patterns and seeing if CoreWeave actually forms that more on a weekly. I'd be moving to a weekly if I wasn't in this name. So I'd want to see it stay pretty tight. Again, break expectations in terms of these reversal days, and then move out of there. And I'd want to see a classic high tide flag. But those even shake out. I've studied those. There aren't that many of those, and they do tend to try to shake out. So, and it might not even form a high tide flag. We don't know. I mean,
Yeah.
so far it's been following pretty closely the eBay precedent. But I know Charles Harris uses precedents very often, and he always mentions that, they're good until they're not, right? Don't keep using them if it breaks the precedent. So I would just echo that in terms of this name.